As always, thank you very much to the wonderful Chris of the RIU team. And look, before you leave, if you've seen me before, today's going to be a good one. We MDs, we stand on stage and we do our speech. And some years your head's a little bit higher and your shoulders are a little bit further back and you feel like you've had a good year. So what I'm presenting today is actually quite a fundamentally different, improved, corporate and technical case for the project. And I think if it's been a tumultuous year personally. I think if I'd have known what life would be like standing here a year ago, I would have said, I don't believe you, if someone had told me. But there's been some great advances and we've had a really good year. So just recapping for those who are new to the project, location still in South Australia. It's still fantastic. We are now in a rapidly advancing pre-feasibility study, and I'm going to talk quite a bit today about that. For those of you sort of seen me before, I don't do the sort of 15 slides of geological data. What I tend to do is really talk about strategy and explain where we're going next and why this matters. The team, it's highly experienced, as I say, location. In a world that is increasingly risky, being in a low sovereign risk jurisdiction next to one of the largest military bases in Australia is a massive advantage. And again, commodities. Doesn't really get better than copper and silver. The cobalt I'll talk to, but wow, it's been a good ride for those ones, especially silver. Now, I famously never found a camera I didn't like or a microphone I didn't want to speak into. And many years ago, we sort of talked about what is our corporate DNA? How are we going to be as a company? And we wanted to be transparent and open. I feel there's a lot of closed information in this industry. I sort of jokingly said, if we could put a camera in the corner of the office, people would buy shares because they'd see the passion and the hard work that goes into the company. Now, ASIC might have a bit of an issue with that, but we do have our own video room. We do our own podcast. And the main thing is good news, rarely, but sometimes bad news. We front the camera. We talk to you. We explain what it means, and we explain what we're going to do about it, and we do that every couple of weeks. And I think that's important. Corporately, we're about 30% above our last raise. We've gone up again this morning. It was 14.5 when I just looked, which is good. As I say, someone's front-running the speech, which is great news. 375 million shares on issue. We're still pretty tight. 50 mil market cap and about 9 mil in the bankers at the last quarterly. We've just done an enormous amount of drilling. So we spent a fair bit of money on that drilling. That's always your painful lack of news flow, lots of money going out the door, bit that gets you what you need to do the next stages. So that's now done. That's the good news. If you hung on from Fremantle, RIU to Sydney, RIU, you've done very well. Because now we are primed for those next stages. Again, I'll quickly run through this because there are dozens of opportunities to see this online in shorter, more narrated formats as well, using the wonderful Verify software. South Australia, we're located, we've got BHP all around us, Carrapatina's next door, Oak Dam West is 16 kilometres to the north. You've got Olympic Dam, which provides the most local airport, just about an hour's drive north of Emmy Bluff. About 750 square kilometres of tenure. You've got grid power. Christopher was talking about that just now, how important that is. You've got grid power going past the front door. The northern water pipeline will go past the front door. BHP is building a siding for rail next to just up on that left-hand side. So it's a phenomenal place to be building a mine. 2 open pits. So the open pits for about 200,000 tonnes of copper, about 6 million ounces of silver, just in the open pits. For context, both of these open pits are well over 1%. MG14 is about 1.5% primary copper in the mine plan. In global mined averages of about 0.4% these days. And there are projects kicking around, even this conference, mining down, or planning to mine down to about 0.25% copper. So over 1%, 1.5% at MG14 in the primary mine plan. In open pits. Why does this matter? Revenue as you're going down underground. Now, nothing wrong with going underground, because once you're there, you're in ore, and that's fantastic. This is our flagship deposit. You can see at the north of the tenure. Now, this mineral resource estimate's a bit out of date. We've just drilled a whole bunch of new holes, and even more out of date is that production target. Now, a production target is a reserve for a company that doesn't yet have a PFS. So at the end of this year, we expect to be delivering our maiden reserve as we deliver a PFS. A lot of upside in that, I'll talk to in a sec. A lot of drill holes have just gone in. Now, this is more for the ASX compliance, but a huge amount of resources here. Roughly 1 million tonnes contained copper equivalent, 600,000 tonnes of copper and 20 million ounces of silver alone in Emmy Bluff. So it's a funny old looking ore body. It's fairly flat. How are we going to mine it? Well, the answer is these things get mined all over the world. Now, to an Aussie audience, it's a little bit unusual, but to the international audience, it's very standard. You can see here one of the great advantages of this, it's surface of the moon stuff. You've got Carapatina next door, you've got BHP's Oak Dam West just 15 kilometers away, and you've got a wonderful area to be developing a mine with relatively very simple traditional owner and pastoralist relations, and in an area that's well known for that. It's pretty shallow by global standards, 400 meters. You can see here a whole group of projects that are mined deeper at similar thicknesses and grades, and this should be relatively simple. We may have scored a bit of an own goal by talking a little bit too much about continuous miners. Now, we're currently doing that trade-off study. I have no idea what the results will be, and I'm not a mining engineer, so I'm going to let the data tell me. I have exceptional owners team mining engineers on staff. But this can be mined one of two ways, or possibly even a hybrid of the two, a long hole open stope, so room and pillar, or a continuous miner, as I say, possibly one of both. The good news, these are done all over the world. They're very standard. This should be a really nice mine to get into production. You can see there the spiral decline and the continuous miners sitting in there. The really exciting bit here, mineral resource estimate is underway. We're targeting sort of probably late June for that updated MRE. And then the production target, that's, as I say, that's what you mine. That's currently sitting there at 32 at 1.8. I have my views about this. It's very outdated. Last time we actually did this was on the old flow sheet, and it was done at about $8,000 copper and $16 per ounce silver, if I remember correctly. Those of you paying attention may note that silver's slightly higher than that. So that's going to be interesting in terms of cutoff grades. It's also going to be really interesting in terms of working through the new flow sheet. Massive potential upside there. So resource gets done. Flow sheet work gets done, that goes into the updated mining. Mineral inventory, production target, reserve, there's a myriad of words, but ultimately it's what you get out of the ground and into your processing plant. Now this time last year we were working away on this. Think Elizabeth Creek, you've got a copper, silver, cobalt resource. And there's quite a lot of cobalt, but cobalt's a funny old metal, it's very much controlled by Glencore. And the price goes up, the price goes down. It's back up at the moment, which is rather nice. The long-term average is about 25 years, is $60,000 a ton, and that's what the long-term forecast is as well. But you've got to go through the final product at Elizabeth Creek. So one of the things we worked on is, well, if we can leach the copper and the silver, that should give us high recoveries at a lower capex, at a lower opex. Took us a little bit of time, but in August last year, we got the chemistry right. And we've put out those results. That resulted in a pretty big uptick into our share price, raised some money, got on with the PFS. The big, most important bit of that was getting the drilling done, which is now done. So this has given us a huge uptick in the project, which gave us a wonderful uptick in the economics. You can see here the updated base case, $10,500 per ton copper. Bear in mind, it's just over $13,000 this morning, $60 per ounce silver. It's been as high as $1.20. It's sitting there at around about, or 120, I should say. And it's sitting there at around about 75, 78 at the moment. So we are using assumptions well below the current spot price, and we are getting phenomenal post-tax IRRs between 43 and about 60%, depending on whether you use a sort of a conservative forward case or a more bullish, I guess, today's prices case. 450,000 tons of copper produced over life of mine, 20 million ounces of silver. Now that's really important. I'm going to tell you why in a second. Really, really important. Everyone likes catalysts. I get it. The catalysts really are the PFS. But over the last year, I like to say, we get stuff done. We're not afraid of a bit of hard work at Coda, and we like to push things forwards. So RIU last year, I was standing on stage, we were under 8 cents. We're at 14.5 right now, I believe. The NPV of the project, close to doubled at pretty conservative prices. That's the 10,500 copper case. The commodity prices, they've gone up a lot. The recoveries, well, that's the bit we can control. They've gone up as well. We were in a scoping study, we're now in a PFS. We've just drilled 6,300 meters. So we have done a lot over the last year. I'm a long-distance runner and a martial artist, and I always joke long-distance runners make really good CEOs of mining companies because it's hard, your legs hurt, your lungs are busting, and you've got to keep going. And that's what we do at Coda, we keep going. So the short-term catalysts, there's a lot happening here. You've got the updated MRE coming, flowsheet and metallurgy. This is pretty important. I'm going to tell you why. Chemistry is the hard bit to get right. The engineering questions are generally engineering solutions that you just work through. But going from exceptional chemistry to 350 tons per hour through a plant, there's a bit of wood to chop there. We've got some serious work to still do. That work's being done. The catalyst, when we deliver that, I believe will be exceptional, and that's really fundamental to the project. The updated mine plan optimization I've talked about, it's horribly outdated. It needs some work. I'm really excited about that because generally, if it's outdated, it can only get better. Otherwise, you revert to your original plan. So that's fantastic news. PFS should be out. My schedule says the end of November, early December. Anything hits the critical path, you know what happens in mining, but we are targeting the end of 2026, and we're reasonably confident of delivering that. So, PFS. Right around that really important Christmas period as you come into the new year, come into 2027, hopefully the Middle East has calmed down, and people are seeing a phenomenal project in a low sovereign risk jurisdiction with those really fundamental mining and metallurgical questions solved, engineering done, independent project review done. Happy days. What next? Why does this matter so much? Why do I keep using these three little words, PFS? It's a great project. You really don't have to be a genius to run Coda's strategy right now. You have to be a hard worker, you have to get stuff done, but we are treading a very, very well-worn path here. New World Resources. Nick standing on stage not long ago, a couple of cents just towards delivering a PFS, taken out at 6.8. Xanadu delivers a PFS 2 to 8. Rex Minerals taken out, what, 384 million Aussie dollars by Salim Group, not long after delivering an updated feasibility study. There's a well-trodden path of a lack of M&A targets in a really tight market sitting on the ASX. There's also interesting, and this is where it gets really fun, because you don't necessarily want to get taken out. It's a great commercial option if you get the right outcomes there. But you also want to develop your project. And you want that option. You want to have that strategic tension between the two options. Silver streaming is suddenly coming online as a really powerful way to get these things moving. Look at what KGL just did. $300 million US, not long after delivering a feasibility study, I might add. Forward sell for roughly 6 million ounces of silver as a byproduct. Now, I don't like forward selling your primary commodity. It takes the excitement out of the topco. Giving away your offtake can be a good strategy, not so often. Your byproduct, beautiful. So we've got 20 million ounces of silver. So again, if we were to do a similar deal in the future, we would only be forward selling a much smaller proportion of our total mineral inventory. 20 moz versus about 8. So this gives some really interesting strategic options going forwards. There's still some wood to chop. There's still some work to do. There's a few exciting catalysts along the way, but the strategy is simple. Deliver the PFS. Deliver all of those bits along the road to the PFS, which hopefully will keep shareholders engaged and excited. Drive that strategy forward, create commercial optionality, and in the meantime, make sure that every decision you make is driving it forwards. So somebody who looks at the work you do says, that is exceptional high quality work. We want to be a part of that, whether it's in streaming, royalties, M&A, or as a long-term shareholder. As I said, we get stuff done at Coda. It's been a great year. Really looking forward to the next few months ahead. With that, I thank you very much.